Hello everyone. If you are an Indian doctor who's recently moved to the UK for work or even planning to move to the UK in the near future, this video is for you. Along with the excitement of a new career and new work environment, most likely you will also experience a significant jump in your take home income. It's crucial to manage this money wisely as both the rewards and the pitfalls are greater in the UK financial system. In this video, I will explain why investing should be the top of your priority for any Indians living in the UK, regardless of your profession. I will cover the unique challenges and opportunities plus popular investment choices to build your wealth strategically. If you are new here, hello, my name is Suman. I am an Indian doctor working in the UK. On this YouTube channel, I make videos about life and work in the UK and how you can use your time in the UK for a better financially secure future. So let's try to understand why it is important to invest as an Indian in the UK. So the first point is higher earning potential and higher stakes. Most Indians are economic migrants. That means they will relocate to another country for better economic and career opportunities. Your salary in the UK will likely be higher than what you earned in India. For example, when I came to UK from India back in 2015, I had a 5x increase of my salary and 4x increase of my monthly savings. With more money comes more responsibility and the potential for bigger financial mistakes. So it's important to learn about managing your budgets, savings, and investing to achieve your own financial independence. The second point that I want to discuss here is the building phase. Most doctors will be relocating in their late 20s or early 30s, so the exciting phase of life is about growth, growing income, growing responsibilities, and perhaps even growing a family. Investing now will help you create a strong foundation to meet the needs of your future self and your loved ones. The third point that I would like to mention here is temptation versus smart spending. The UK is a consumer's paradise with endless options for luxury and leisure. It's easy to overspend if you are not mindful about your spendings. This is the time when you will be buying the latest iPhone, smartwatches, Gucci or Louis Vuitton merchandise, or perhaps a Mercedes car and make Instagram reels to share it with your friends. I'm not suggesting you shouldn't do that. Otherwise, what's the point of earning money, isn't it? But it's important to budget and allocate certain portions of your salary for your needs, your wants, and your desires, as well as some for your savings. For example, use the 50-30-20 rule and allocate 50% of your income for your needs. For example, your house rent, utility bill, council tax bill, etc. 30% for your wants, for example, holidays, maybe you want to buy a fancy car. Make sure that you can afford it within the 30% of your income. And 20% use it for your investment and your savings. If you can afford your dream car monthly payments with 30% of your salary, then go ahead and buy it. If not, then work hard so that your income goes up and then you can afford your dream car. Another important consideration about UK is that the cost of living is quite high. So most of your take home salary will go towards your needs if you don't plan carefully. For example, if you are living in London, then your rent will likely take up a big chunk of your salary, reducing your disposable income. Whereas if you're living in north of England near Manchester like me, your rents will be a lot cheaper. Another example is about buying your daily lunch in your workplace or hospital. In India, all my working life as a doctor, I always had my lunch and dinner at the hospital canteen. However, after coming to the UK, when I calculated the cost of buying food from hospital canteen daily, it was almost equal to my monthly grocery bill. Whereas taking home cooked food was much cheaper and also tastier than hospital food. Tracking your spendings help you to balance your spending and eventually securing your future financial well-being. The next point is about tax efficient growth. Before coming to the UK, I never really realized the burden of tax on your income. As a junior doctor in India, our salary was so low that I was never really worried about tax. During majority of my career in India, for example, the internship or even as a first year PGT, my salary was below the minimum tax threshold. However, in the UK, my first job put me in the 40% tax bracket. I didn't know then about tax saving options like ISA, the importance of pension, etc. So made some costly financial mistakes due to my ignorance. I didn't know that the UK offers tax sheltered accounts like ISA to maximize your savings. And anyone who knows about this rule can significantly boost their savings and investment over time. So far, we have covered the important reasons why an NRI should invest. Now, let's try to understand how you're going to start investing and some important considerations before that. The first thing to consider before you start investing is understanding your own risk profile. How much market fluctuations are you comfortable with? This determines whether you should choose stable, low risk options like cash or bonds or aim for higher potential returns with more volatile investment options. For example, equity or cryptocurrency. Make sure you have some emergency fund for 3 to 6 months of expenses and pay off any high interest debt like credit card bills before you even consider investing. The next thing that you should understand is your investment time frame. When do you need the money? Short-term goals call for safer assets, while long-term goal allows you to ride out the market ups and downs. And the third point is seek professional guidance or advice. If you are unsure, a qualified financial advisor can personalize a plan that aligns with your own career goals and interests. By the way, I am not a qualified financial advisor. This video is for information purposes only and should not be considered as financial advice. Next in this video, I am going to discuss about 5 popular investment options for NRIs in the UK if you are just starting out as a beginner. Most Indians will have investment in both India and the UK. I personally do that and invest more than 50% of my portfolio in India. But there are certain advantages of investing in the UK as an NRI. The most important of them is the ISA allowance. I have done a separate video on ISA allowance in the UK. Please do check it out to know more on this topic. You will find the link in the description box below. In short, the ISA or individual savings allowance helps to save £20,000 in one tax year in the UK. This investment is completely tax free and the interest, capital gain tax or even dividend received as a part of this ISA investment is completely tax free. This is a huge advantage because in India you have to pay long-term or short-term capital gains tax on your profits. Let's learn about some popular investment options for NRIs in the UK. Number one option is cash. If you are a very defensive investor and you are worried about your money and don't want to take any risk with your money, then the option for you is cash ISA or saver account offered by the UK banks. This is also a good option for saving for your emergency funds. Please do shop around for the best savings rate as they vary considerably between different providers. I made another video on how to search for savings bank account in the UK, please do check it out. I will leave the link in the description box below. Use comparison websites like Money Supermarket to browse different interest rate in various accounts and go for the one with the highest interest rates. Remember, you don't have to invest your savings account money in the same bank where you have your current account. You are free to browse around and go for the provider with the highest interest rates. Another option for cash savings is the NRI fixed deposit account, which will offer better rates than most UK banks. But one of the risks for that is that of currency fluctuation, because GBP is to INR rates will go up and down, and there is a risk that if INR falls in value, then your investment return will also go down. If you really want to keep your money in GBP or pound forms, then you can choose FCNR deposits for Indian banks. But nowadays the rates for savings account in the UK are really good, so there is no point going for a FCNR. The second option where you should park your money is stocks and shares ISA. You can open a stocks and shares ISA and buy individual shares of publicly listed companies. For this, you need enough skills to identify good companies, understand their business model, and also have some technical knowledge about stock price movements. If you buy the shares as a part of stocks and shares ISA, then the capital gains, dividends, everything related to the stock is going to be tax free. In case you have more money left after investing £20,000 in your stocks and shares ISA, then you can choose a general investment account to buy stocks and shares. Difference between these two accounts is that the tax efficient ISA accounts are like a protective wrapper around your investment, whereas there are tax implications for general investment account. By the way, you can also buy bonds as a part of your investment account if you don't like to buy equities. In case you don't feel comfortable buying individual shares, then you can think about investing through ETFs or index funds or funds or investment trusts, which are collection of multiple shares, and this is going to reduce your risk if you don't feel confident to buy individual shares. So let's discuss about the third option, which is index funds. Imagine owning a small slice of the entire UK or US markets. Index funds track major indices like FTSE 100 for the UK or S&P 500 for the US, offering instant diversification and minimizing risk compared to individual stock picking. They are also very cost effective. A similar option is ETFs or exchange traded funds. Similar to index fund, ETFs offer diversification but also gives you more flexibility. They trade on the stock exchange, so you can buy and sell them throughout the day. There are ETFs for different sectors, regions, and investment themes. I don't invest in individual stocks and have ETF portfolio with Invest Engine platform as a part of my stocks and shares ISA allowance. I made a separate video about my Invest Engine platform and what are the ETFs that I'm investing in. Please do check it out. I have provided the link in the description box below. The next option, in case you don't want to buy individual stocks, is buying investment trust or funds. These are like the professionally managed funds where the investment decisions are made by professional managers and you pay some charges for their services. They pull the money from investors like you and me and buy a variety of assets, which could be equity, bonds, commodities like gold and silver, also real estates. It is a good option if you prefer a hands-off approach and want experts to manage your money for you. There are many fund and investment trusts available to the UK investor depending on the platform that you are using. This can be included in your stocks and shares ISA for tax-free returns. The next option of investment is property investment. Buying property to rent out, also known as buy to let, or investing in real estate investment trusts or REITs can be ways to generate rental income and potential long-term capital growth. Do your research as this market involves its own unique factors like tax liabilities and market conditions, etc. These are some of the main investment options for beginners, but you have many more options like cryptocurrency, etc. However, I would recommend utilizing the £20,000 per year ISA allowance every year first before thinking about any other investments. Also, you can divert some of your funds to Indian accounts and invest in India. You may consider watching this video on investing in Indian mutual funds through the NRI platform, which is a dedicated platform for NRI mutual fund investments. Please do check out my detailed video on this topic, link in the description below. In conclusion, Indian doctors have a fantastic chance to build a prosperous financial life in the UK. Learning to invest isn't just about having more money, it's about making your money work hard for you. Start researching, explore various investment options, and remember, consistency is the key. Investment journey is a marathon and not a sprint. So stay invested, use your time to your advantage, and happy investing. See you in the next video.